One of the questions that we get a lot of times from our clients is how to complete the family law financial affidavit. The family law financial affidavit is something that's going to be required in all cases involving a dissolution of marriage, a paternity petition, anytime there's child support involved, equitable distribution of assets and debts. So what I thought we would do is take a little bit of time just to explain the process and hopefully educate you on how to complete this form. Looking at the top of the form, this is the caption. You can find this information on any other document that you've already completed in your case. In the Circuit Court of the blank here is obviously, if you're in Hillsborough, it's going to be the 13th Judicial Circuit. It'd be different for Pinellas and Pasco and Polk, and the same here in and for blank county. Here it would be Hillsborough. So you would just simply type in, 13th, if you're doing Hillsborough, and then obviously Hillsborough goes here. Case number is whatever the case number is that was assigned to your file. If it's a 2018 case, you're going to start with the 18 DR, and then whatever the sequence of numbers are following that. We'll just do 000 1 2 3. Division is going to be, for instance, R, or again, whatever the division is that you've been assigned to. Petitioner, pretty self-explanatory. You just put the name of the petitioner there, and then you're going to put the name of the respondent down below. Again, full legal name, who's ever completing this, the petitioner or the respondent, date of birth, what you do for a living, whether you're a teacher, doctor, whatever it might be, pilot. And then down here under your currently, if you're employed, you're going to check this box, and then you're simply going to put down your employer's name, address, and other contact information. Your pay rate is, again, either if you're paid every week, whatever that might be, if you're paid every other week, which would be 26 times a year, or if you're paid twice a month, which again would be 24 times a year. But whatever it is, you put your pay rate there. And then you keep toggling down, and since we're in 2018, last year's gross income, you're going to put 2017, and then whatever it is that you made in 2017 from a gross income perspective, and what the other party's income is. Moving forward, your monthly gross salary or wages, again, looking back up here, if you're paid every other week, that's 26 times. You're going to multiply your pay rate times 26 times and then divide by 12 to get your monthly gross wages. If you're paid twice a month, you're going to take your pay rate, multiply that times 24, and then divide by 12 to get your monthly gross wages. When it comes to bonuses, people might be paid quarterly. They might be paid some other way. Whatever it is, however you're paid, if it's quarterly or whatever, you're going to multiply that, and then you're going to divide by 12 to put down your monthly bonuses or commissions. If it's some other method, again, whatever it is, however you're paid once a year, you divide it by 12. Monthly business income, if you're self-employed, again, the important thing to look at here is that we're looking at gross receipts minus ordinary and necessary expenses to produce the income. So you don't just put down on number 3 if your business brought in $300,000 gross last year. You don't just put down divided by 12, whatever that number might be. You're going to have to back out the ordinary and necessary expenses to produce the income. Sometimes people take itemized deductions or other deductions that they might be allowed under the tax return, but that doesn't necessarily mean you can take those same deductions here on 3. It's only those ordinary and necessary to produce the income, okay? The rest of these are pretty self-explanatory: unemployment compensation, monthly workers' comp. In terms of alimony, if you're not actually receiving alimony already from the present case, then this is not going to have any entry here. It's going to be 0. Another thing to point out, rental income. It's not just the gross amount that you get from your lease. If there's a mortgage on the property, if you have a property management company, if you pay taxes, if there's a routine upkeep, those are expenses that you can deduct from the gross before you come up to whatever your monthly rental income is going to be here. All right. Moving forward, this you can take right from your pay stub, your filing status, deductions claimed, what your FICA is, and you're just going to enter in all those numbers here that correspond. And then what you're going to do is you're going to take the present monthly net income, and you're going to get that number here where you take the total deductions. You're going to subtract all of that from your gross, and then you're going to put your monthly net here. The next section deals with your average monthly expenses. Now, if you're currently paying a mortgage or a rent payment, you're going to put that, whatever that number is, right here. So if it's, $2,000 a month is your monthly mortgage that you're paying, that's what you're going to put right there. If you are in the process of securing another residence, or you think you're going to be moving out of the marital residence, you're going to put, you're going to do some research, and you're going to find out how much the monthly rent might be, and you're going to put that number there, and then you're going to write estimate next to the entry, because you're not 100% sure what it's going to be. The rest of the entries work the same way. Whatever your average electricity is, if you're in an apartment or a house, whatever it is, you can look back over the last few months and average those together to get your monthly electricity amount. And again, if you're going to be moving out and securing another residence, you're going to write estimate. This is what I think it's going to be, depending upon the size of the future residence compared to where you're living right now. You want to include monthly repairs and maintenance. Basically, you want to go through this. It's tedious, but you're going to want to go through each one of these categories and look back over your past few months of expenses and average those out to make sure that you have an expense, if it exists, for all of these categories. And if there happens to be some other expense that you might have that is not included in the pre-printed expense itemization, you've got some space down here to add those as well. Next, we go down to the auto expenses. Again, you're going to be doing the same assessment, looking through your expenses. How much am I paying on average for gas and oil? And if it's on a weekly basis, you're just going to multiply that out over the year, 52 weeks, and then divide by 12 to get your monthly amount here. Same for repairs. People may only have repairs maybe every 4 or 6 months or so. You just take whatever your repairs have been over the past year or so, divide that by 12 to get your monthly amount. And the same for these other categories. Now, for instance, insurance, if you are paying the insurance on 2 vehicles, but you're only driving one of them, you can put the total monthly insurance here, and then you can add a footnote to the form that indicates how much is the insurance for your vehicle and how much the insurance is for instance, your spouse's vehicle. Moving forward, these are all of the expenses for the kids. So, again, same assessment as for all these other categories. What are you spending on average for monthly lunch money, allowances, clothing and uniforms? Again, you're going to go back through your credit card statements, you're going to go back through your bank statements, and you're going to average those numbers to come up with your monthly amounts. It's important to take some time on this document and not skip or just come up with a number out of thin air. Everyone's going to be looking at this, opposing counsel is going to be looking at this, the court is going to be looking at this, and people are going to be relying on this document if there's an alimony issue to determine, if you're the one looking for alimony, what your need is. If you're the person who's making a slightly larger income and has exposure, they're going to be looking at this to determine what your ability to pay that alimony is. So again, make sure you complete all of these entries for expenses for the kids. And if you have kids from another relationship, again, there's some lines here where you can put whatever those items might be that you're paying and how much they are on a monthly basis. Health insurance. You want to make sure here that if you've already deducted the health insurance up here from your deductions, that you are not double dipping. So for instance, on line 23 here, we've got monthly health insurance payments excluding the portion paid for any kids. So this number 23 is looking for the cost for your individual health insurance. If you didn't have any kids, how much would it be just for your health insurance? And that's the number that you put here. There's a space down below under the kids insurance, here 45, how much does it cost extra to have the kids on insurance? And you would put that number here. And so you wouldn't duplicate on line 64 health insurance here if it's already been accounted for in your prior deductions. If you've got a life insurance payment, you're going to put that here on 65. 66 is the same assessment as the health insurance. If you've already deducted that above, you don't double dip and put that on line 66. Moving forward, again, we're going back to other monthly expenses not listed above. These are your monthly expenses, the person who is completing this form. So how much are you spending on average cleaning and on laundry, for dry cleaning and laundry? How much are you spending on average for monthly clothing, grooming, pet expenses? There's a lot of expenses here that people just don't typically pay attention to on a monthly basis, but it's important to focus on it for purposes of this financial affidavit, because again, when we're dealing with ability to pay alimony or the need, you want to make sure that you've accounted for all of these expenses in that assessment. Monthly payment to creditors. If you've got an outstanding Visa, American Express that you pay on monthly, you can itemize that here. One thing to be mindful of is that if the expenses for that credit card are already itemized up above. So for instance, if you typically have a credit card and you're paying your gas to pay for the credit card or to pay for the gas using your credit card, you've already accounted for that up here under the gas expense. So one thing to be mindful of here is, again, making sure that you're not double dipping, that you're not including an expense here for a creditor payment where you've already included it up above by itemizing it for food or whatever else it is that you might be purchasing. Moving on. So again, what you're going to do here on 106 is, again, you're going to bring down what your present monthly net income is. And you're going to put that number here. You're going to put your present monthly total expenses here, and then you're going to subtract those two numbers. And if you've got a surplus at the end of the month, you're going to put that here. And if you have a deficit, again, you put that there. All right. This is the assets and liabilities section. This is where we're going to put down, even if you have a child support case, technically you're supposed to complete this section as well as the liabilities. And certainly if you have a dissolution of marriage, you're going to want to complete this, because this is where we're going to be dealing with or looking to equitable distribution of the assets and debts. So here, cash on hand, usually at the date of filing, how much did you have on hand, if any? How much is in your bank accounts on the date of filing? And you're going to itemize the accounts if you have space, and you can always add an extra sheet if you need to, if you have multiple bank accounts that you need to worry about. Stocks and bonds, again, what is it? Which account do you have, and what's the current market value on the date of filing? Money owed to you, same thing. Who owes it to you, and how much do they owe? Your house, put your address in here, and what do you think the fair market value was on the date of filing? A lot of times people look to Zillow to complete this and get an idea of what the fair market value might be. If you've got a business interest, you're going to tell me or tell the court what the business is called and what you think the value is. If you don't know, you can write currently unknown right there. Automobiles, you're going to itemize your cars. You can go to Kelley Blue Book and assess what the fair market value might be based upon the mileage and the condition of the car, and you're going to put that here. Same thing for your boats, maybe motorcycles or any other vehicles that you have. You're going to do the same and enter the values here. Retirement plans, again, if you've got a 401k, you're going to say it's a 401k with whatever the entity is, and then what the value is on the fair market, on the date of filing. This column, non-marital versus marital, again, can't get into specifics of your case, but if you've got an asset that you think might be non-marital, then you're going to click this box here as it's being non-marital, for instance, to the husband. Or maybe it's not, if you're the wife and you're completing this form, it's the non-marital to the wife. Generally speaking, assets acquired during the marriage are going to be considered marital, but there's a lot of exceptions. It's important to consult with an attorney and get the specifics on whether your particular asset that you're worried about is marital or non-marital. It's also very common for a 401k to have both a non-marital component, a portion of it that was earned prior to the date of marriage, and a marital component, a part that was earned after the date of marriage. Furniture and furnishings in the home, again, generally speaking, this is garage sale value. It's not replacement value. It's not what it cost you to purchase the item. It is garage sale value. Sometimes if people have antiques, that can increase the value for this section here. Collectibles, jewelry, again, pretty self-explanatory, whatever you think the market value is of the items that you're going to be listing here. Same for sports, TV, and stereo equipment. It's not replacement value. It's if you sold it, what could you get for it? Moving on to the liabilities and debts, again, here's where you're going to put down the information. If you've got a residence and there's a mortgage on it, how much is the mortgage? If there's a second mortgage, how much is that? If you've got credit cards, Amex, Visa, you don't have to identify the full account number, but you're probably going to want to put Visa and maybe the last 4 digits of the card so that you know which card you're talking about if you've got multiple cards, and you're going to put the amount owed on the date of filing. Same for the auto loan, what's owed on the date of filing, and so on. And then what you're going to do is you're going to add up all of your assets, and you're going to put that number here. You're going to add up all of your liabilities, and you're going to put that here, and then you're going to put your total net worth. It could be positive or negative, depending upon, again, these two numbers right here. Contingent assets. For instance, if you have a personal injury claim and you don't know what the value is, or it's a disputed personal injury claim, you can put down personal injury claim and then possible value. If you don't know, you're going to say currently unknown. That's a contingent asset. If you've got a liability out there where maybe you're going to end up owing some money, but you don't know how much, maybe there's a tax dispute, maybe you're being sued for something, again, you're going to, whatever that contingent liability is, you're going to identify it here. And then again, if you know the possible amount that might be due, you're going to put that here. If you don't know, you put it here. And again, for all of these, you're going to designate, if you think it's non-marital, you can designate it as being non-marital. Child support guidelines worksheet section. Again, if you've got kids, this is going to be checked, yes. I'm going to ultimately, if you haven't already, file a child support guidelines worksheet. So this is where you would check it is filed or it will be filed in this case. If you don't have any kids, this is a dissolution of marriage with no kids, then you're going to check child support guidelines will not be filed in this case. So this is just a brief summary of the financial affidavit. Everything that I've gone through today applies equally to the affidavits that exist for people making less than $50,000 a year. As a practice, we like to use this financial affidavit for both people making more or less than $50,000. You're not precluded from using this form if you make less than 50. It's just that this is a little bit more detailed and it gives a little bit more itemization of the expenses and helps people really flesh out their monthly expenses than the short form financial affidavit. So again, I hope this has been helpful, and thanks for listening.